video, I'm going to share with you Singapore's new investment landscape and trends for 2025. Let's get into it. Hey friends, welcome back to the channel. I'm Iggy here, and I've been covering topics such as stocks, finance, CPF, and basically everything related to growing your wealth. The Investing Iguana is featured and ranked 8th in the 2023 Influential Tigers by Tiger Brokers, with over 800,000 reads. I've also covered over 600 videos and over 280,000 watch hours as of November 2024. I occasionally focus on topics related to regional or world economy too. Now, let's dive into Singapore's investment landscape for 2025. We'll explore 5 key areas that are shaping the future of investments in our little red dot. I will also be making these related SGX stocks that you should be watching out for. Singapore has become a powerhouse in the tech world. Our government isn't just sitting back. They're actively investing in and promoting technological innovation. This proactive approach has created a fertile ground for tech companies to grow and thrive. One of our biggest strengths is our talent pool. We've got some of the brightest minds from around the world right here in Singapore. Pair that with our world-class infrastructure, and you've got a recipe for success. Our internet speeds are lightning fast, our data centers are top-notch, and our cybersecurity measures are robust. But what's really exciting is our focus on emerging technologies. Singapore has become a hub for research and development in areas like artificial intelligence and blockchain. Companies are flocking here to tap into this innovative environment. For investors, this means plenty of opportunities. You could look into tech startups, established tech firms expanding their operations here, or even government-backed tech initiatives. The key is to stay informed about the latest developments and trends in the tech sector. Based on the latest market data, several SGX-listed technology stocks stand out as particularly noteworthy for investors. Let me highlight the most promising ones. Venture Corporation leads the pack as Singapore's premier global technology solutions provider. Despite a 9.4% revenue decline in the first 9 months of 2024, the company maintains strong fundamentals with robust operating cash flow of $393.8 million and an impressive net cash position of $119 billion. Their focus on AI data centers and semiconductor-related products positions them well for future growth. Franken Group has shown remarkable resilience, reporting a 7.7% revenue increase to $198.6 million in Q3 2024. Their mechatronics division's impressive 10.8% growth, driven by semiconductor and analytical life sciences segments, makes them particularly attractive. With a healthy net cash position of $40.8 million, they're well positioned to capitalize on the semiconductor industry's recovery. AEM Holdings presents an interesting opportunity with forecasted earnings growth of 87.7% and revenue growth of 12.1% per annum. Their specialization in semiconductor testing solutions for AI applications gives them a competitive edge in the growing tech sector. IFast Corporation has demonstrated exceptional performance with a 50% year-over-year revenue increase to $99.1 million in Q3 2024. Their net profit surge of 97% and improved profit margin of 17% reflects strong operational execution. When investing in Singapore's tech sector, consider diversifying across these companies to balance risks and opportunities. Each brings unique strengths. Venture's established market position, Franken's growth in specialized segments, AEM's future growth potential, and IFast's proven execution in fintech. Keep in mind that tech stocks can be volatile, so proper due diligence and regular monitoring of company developments are essential. Now, let's talk about something close to many Singaporeans' hearts: real estate. Our property market offers a smorgasbord of investment opportunities. We're not just talking about residential properties here. There's also commercial real estate to consider. If you're thinking about investing in property, you need to understand the nuances of different property types and neighborhoods. Each area in Singapore has its own character and potential for growth. For residential properties, consider factors like proximity to MRT stations, schools, and amenities. These can significantly impact rental demand and property value. In the commercial space, think about upcoming business hubs and areas slated for redevelopment. When evaluating a property investment, look at rental yields and capital appreciation potential. Rental yields give you an idea of the income you can expect, while capital appreciation shows how much the property value might increase over time. Don't forget about government regulations. Singapore's property market is highly regulated, with measures like the additional buyer's stamp duty, ABSD, and total debt servicing ratio, TDSR, in place. These rules can impact your investment strategy, so make sure you're up to date with the latest regulations. Let me expand on some exciting property-related stocks you should watch on the Singapore Exchange. Speaking of real estate investments, CapitaLand stands out as Asia's largest real estate investment manager with over 115 billion Singapore dollars in assets under management. They've shown consistent dividend yields above 3% and continue to expand their portfolio across the region. Another interesting player is CDL Hospitality Trusts, which has bounced back impressively from the pandemic. With their focus on hospitality and retail sectors, they're offering attractive dividend yields of around 4.7%. Their dynamic approach to property management and strategic asset sales makes them worth watching. For those interested in the technology side of real estate, Keppel DC REIT deserves attention. They manage data centers across 10 countries, and with the growing digital economy, their portfolio of 23 data centers positions them well for future growth. Their recent acquisitions in Singapore show promising potential for increased distributions to investors. Let's not forget about APAC Realty Limited, which offers a unique angle on property investments. As the holder of ERA regional master franchise rights across 17 countries in Asia Pacific, they're well positioned to benefit from the region's real estate transactions. With over 18,000 sales staff and 646 offices, they're at the forefront of property services innovation. These companies offer different ways to participate in Singapore's real estate market without directly owning properties. Whether it's through development companies, REITs, or property service providers, there are multiple avenues to consider for your investment portfolio. Sustainability is more than just a buzzword. It's becoming a crucial factor in investment decisions. Singapore is leading the charge in this area with a strong focus on renewable energy and green technologies. For investors, this opens up a whole new world of opportunities. You could look into green bonds, which are used to fund environmentally friendly projects. Or you might consider investing in companies that follow environmental, social, and governance (ESG) principles. Another exciting area is sustainable infrastructure projects. These could include things like solar farms, waste-to-energy plants, or green buildings. These projects not only offer potential financial returns, but also contribute to a more sustainable future for Singapore. Investing in sustainability isn't just good for the planet. It can be good for your portfolio too. Many sustainable investments have shown strong performance in recent years. Plus, as more investors prioritize sustainability, these investments could see increased demand in the future. Let me expand on some specific stocks to watch in Singapore's sustainability space. Sembcorp Industries has positioned itself as a leader in the renewable energy transition. They've made significant strides in solar and wind energy projects, making them a prime candidate for investors looking to tap into the green energy sector. Their commitment to sustainability has already shown promising results, with their green energy portfolio expanding rapidly. Keppel Corporation is another interesting play in the sustainability space. They've transformed from a traditional industrial conglomerate into a provider of sustainable solutions, particularly in renewable energy and clean water infrastructure. Their strategic pivot towards sustainable urban solutions and renewable energy makes them worth watching. Singapore Technologies. Engineering has also embraced sustainability through their smart city solutions and sustainable infrastructure projects. Their innovative approach to environmental solutions, combined with their strong government backing, positions them well for future growth. ComfortDelGro deserves attention for their push towards electric vehicles and sustainable transportation solutions. As Singapore moves towards greener public transportation, ComfortDelGro's early adoption of electric vehicles and sustainable practices could give them a competitive edge. What's particularly interesting is that starting from financial year 2025, all these companies listed on Singapore Exchange will need to report their greenhouse gas emissions. This mandatory climate reporting will bring more transparency to their sustainability efforts and could potentially impact their valuations. Companies that are already ahead in their sustainability journey might see increased investor interest as environmental consciousness continues to grow in the investment community. Singapore's startup scene is booming, and with it, the venture capital industry is flourishing. We're seeing more and more innovative startups popping up across various sectors. When it comes to investing in this space through the Singapore Exchange, several established companies are worth watching. The financial sector offers solid opportunities through banks like DBS Group Holdings, Overseas Chinese Banking Corporation, and United Overseas Bank. These banks not only provide stable returns, but also invest heavily in fintech innovations. For example, DBS has been leading the charge in digital banking transformation and offers an attractive dividend yield, projected to reach 7% by 2025. In the technology and telecommunications space, Singapore Telecommunications has made an impressive comeback with a 30% rally year to date. Their comprehensive transformation strategy and focus on digital innovation make them an interesting play in the tech space. Meanwhile, companies like Keppel Corporation are positioning themselves at the intersection of technology and sustainable infrastructure, making them worth considering for those interested in the future of Singapore's tech ecosystem. For those looking at growth stage companies, keep an eye on emerging fintech players like Syfe, which has been recognized among Singapore's most promising high-growth technology companies. The fintech sector in Singapore is particularly dynamic, with many companies showing average growth rates exceeding 40%. But remember, venture capital investments come with their own set of risks and rewards. These investments are typically illiquid, meaning you can't easily sell your stake. They're also high risk. Many startups fail, but those that succeed can offer substantial returns. That's why it's crucial to balance your portfolio with both established blue-chip stocks and growth stage companies. To succeed in venture capital investing, you need to do your homework. Look at the startup's business model, its market potential, and the strength of its team. It's also a good idea to diversify your investments across multiple startups to spread your risk. Consider mixing traditional banking stocks with emerging fintech players to create a balanced exposure to Singapore's evolving financial landscape. As we look towards 2025 and beyond, Singapore's investment landscape is full of promise. Our robust economy, strategic location, and commitment to innovation make us an attractive destination for investors from all over the world. We've got opportunities across various sectors. In tech, we're seeing exciting developments in AI, blockchain, and other cutting-edge technologies. Our real estate market continues to offer stable returns, with new areas being developed and redeveloped. Sustainable investments are gaining traction, aligning financial returns with positive environmental impact. And our thriving startup ecosystem is creating opportunities for venture capital investments. But as with any investment, it's crucial to stay informed. Keep an eye on the latest trends, regulatory changes, and economic developments. Diversify your portfolio to spread your risk. And most importantly, align your investments with your financial goals and risk tolerance. Remember, investing is a journey, not a destination. It requires patience, continuous learning, and sometimes the courage to take calculated risks. But with the right approach and knowledge, you can navigate Singapore's investment landscape and work towards building long-term wealth. If you guys enjoyed this video, then you're going to love this video where you will learn about top Singapore REITs with 5.6% or more yields revealed here. It's a perfect complement to today's discussion on Singapore's investment landscape. In that video, I dive deep into some of the most attractive REITs in Singapore that are offering impressive yields. You'll learn about the factors that contribute to these high yields, the potential risks and rewards, and how these REITs fit into Singapore's broader real estate market. It's packed with valuable insights that can help you make more informed investment decisions. So, don't forget to check it out after this video. Until next time, this is Iggy from the Investing Iguana, signing off.